Hello and welcome to another episode of Takeaways. My name is Jordan Brooks, Senior Market Analyst for ALN Apartment Data, and today I just wanted to spend a couple of minutes digging into our most recent newsletter, which was a mid-year review for multifamily performance so far in 2024. And one of the topics that we really didn't have space to dig into in the newsletter was a market level look at absorption leaders. The net absorption section of the newsletter, we talk about sort of national trends, some price class information, but not a whole lot on specific markets. And so I just wanted to point you to some individual markets that have stood out so far this year from a demand perspective. In terms of net units absorbed, we're talking about markets like Dallas, Fort Worth, Houston, Orlando, Los Angeles, San Francisco, Oakland, Bay Area, and California. Those are kind of our leaders in terms of aggregate absorbed units. On the size adjusted side, so we're looking at net absorption as a percentage of existing stock to kind of bring in some of those smaller markets as well. Some markets that have stood out, Charleston, West Virginia, Myrtle Beach, South Carolina, Abilene, Texas, the state of Hawaii. Again, Hawaii's not big enough from a multifamily perspective to have multiple markets, so the state of Hawaii, and then Rapid City, South Dakota. So those are standouts, again, sort of on a size adjusted basis. And I should also point out that particularly those primary markets, it shouldn't be assumed that because they are a leader in net absorbed units that demand has been especially robust there this year. A good example of that is Dallas Fort Worth, number one in the nation for net absorbed units through June. When you look at net absorption as a share of existing stock, because Dallas Fort Worth is such a large market, it's actually been right about the national average. So again, there's a little bit of context that's important when we're talking about net absorption and the size of the market involved. So those are some absorption standouts. Another thing that we wanted to look at today was rent growth. And a lot of the markets that have done especially well on the rent growth front, achieving more rent growth than the national average. The story there has tended to be that there's been less new supply pressure rather than the rent growth coming from especially robust demand. So we wanted to take a look at markets where rent growth has beat the national average and new supply has also been higher than the national average. And when we talk about a national average for new supply, again, we're looking at sort of a weighted average at the market level of new units delivered as a percent of existing stock to give us that average metric. And there you're really talking about 26 markets out of the 180 plus that ALN tracks around the country. Of those 26, most are secondary and tertiary markets, smaller markets, where it doesn't take a whole lot of units, again, on a percentage of existing stock basis to get a market above average for new supply. And because those smaller markets don't tend to get the same level of consistent new supply, you generally get a pretty good rent growth bump from those new units coming online. So I wanted to point your attention in particular to some primary markets that meet that criteria. Again, above average rent growth and above average new supply. And there we're talking about markets like Miami, Fort Lauderdale, Denver, Colorado Springs, New York City, Minneapolis, St. Paul, Philadelphia, and Seattle. So if you look at those markets, almost across the board, an exception would be New York. For the most part, the rest of those primary markets have had strong demand this year. New York has been closer to the average. The rest have been well above average. And so those markets in particular merit some attention. Something else just quickly I wanted to cover is primary markets where average occupancy is still within sort of the long-term historical normal range. Because as we go through in the newsletter this month, occupancies are very low right now, the lowest in years for just about every market. And for primary markets in particular, most of those are getting quite a bit of new supply. And so I wanted to look and see, which markets are still in the quote unquote normal range, going back sort of to the pre-COVID period before all the volatility of the last few years. And really there are only a handful. So Buffalo, New York, San Bernardino, Riverside in California, Sacramento, California, San Diego, also in California, and Detroit. And if you look at these markets, they're at the lower end of the normal range, so kind of hovering between 92 and 93% for overall average occupancy. And all 5 of these have had relatively low levels of new supply, certainly relative to their size recently. And so again, when we're talking about markets that, particularly primary markets, again, there are a good number of secondary and tertiary markets with average occupancy still in the mid-90s. But for these primary markets, it's not so much that demand there has been so strong that it's buoyed occupancy. It's more the fact that they've had less new supply, and that has maintained occupancies at a higher level. And with that, I just want to quickly point you to a couple of upcoming events that may be of interest to you. The first is July 23rd. I'll be doing a webinar presentation for the Apartment Association of Greater Los Angeles. July 25th, I'll be speaking at the Bay Area Apartment Association Business Exchange in the Tampa area. August 7th, I'll be doing a presentation at the Bay Area Apartment Association Regional Roundtable, also in the Tampa area. And then August 15th, I'll be doing a market update for the Coastal Georgia Apartment Association. That's in Savannah, Georgia. So if any of those areas and markets are of interest to you, make note of that, and I look forward to seeing you there. Also, don't forget to search ALN Apartment Data on your social media channel of choice for additional information. Hit like and subscribe, and click the notification bell so you don't miss any new video content from ALN. And until next month, keep an eye on our blog at alndata.com/blog for additional content, and we will see you then.